approach this market after today's terrible action? There's lots of small unit combat action being won by the bears right now, helped by a Fed official warning us that we might only get one rate cut this year. Makes sense to me. It was a proximate cause of the averages getting pummeled today because not too long ago, Wall Street was looking for 3 rate cuts. A lot of people thought we would get 6 at the beginning of the year. In reality, the economy is strong enough. The Fed has no reason to even think about multiple rate cuts, which, of course, is bad for the market short term, but simply responsible central banking long term. So this market's had a huge run, and now we are in the midst of a sell-off. So what's next? How worried should we be about this pullback? Well, it depends. You heard what I had to say at the top, but another way to answer the question is we're going to go off the charts with the help of Larry Williams. He's a legendary technician. He's a market historian, been the best in the business since I was a teenager. He's written over a dozen books. We had a ton of proprietary technical indicators that everybody uses. Larry's also made some stunning calls in the last few years. He nailed the COVID bottom. He nailed the market-wide bottom in late October. So what does he have to say about the current moment? Particularly because he's been very bullish all the way up. Yeah, Larry's been so bullish since the lows of 2022 that this one's going to be hard, what I'm about to tell you. See, every time the market's gotten hit, he's urged you to buy stocks in a weakness. He recognized those pullbacks were viable because we were in a bull market. And he knew the bull was in charge because of this cycle analysis. He'll look up the historical action in a given stock or index, then identify patterns that seem to repeat themselves over and over. Then he projects those patterns forward to identify markets where, identify moments where the market's more likely to change trajectory. Remember, that's what you're always looking about, change of trajectory. Now, though, Williams actually worried that we're going from melt up, which we've been, to melt down, because the cycles are looking a lot more negative. Although he admits that his timing could be imperfect, and he's been more negative about the Magnificent Seven than was warranted. Only Tesla really broke down from there. Cycles also predicted a plunge in crypto, which happened, but then it roared higher. It's impossible to be right all the time. You just want to make fewer mistakes than the other guy. Let's start with the daily chart of the NASDAQ. The price action in black and the red is the line. The red is the general path that the index has followed for several years. Yeah, that's his cycle forecast. As you can see, if this historical pattern holds true, Williams would expect the NASDAQ to peak around March 15. That's a week and a half from now. Of course, he's not saying the NASDAQ will actually peak on the 15th. Nobody's good enough to put together a cycle forecast that can identify the precise day of a top or bottom. That's not what this tool is supposed to be used for. As Williams explains, these cycles forecasts are more like traffic lights. When the cycle's headed higher, that's a green light. When it's headed lower, that's a red light. While the exact dates won't be perfect, this kind of helpful, I find it very helpful analysis. It's showing us where something like the NASDAQ is more likely to change its direction, change the trajectory. And look, if you took your cue from Larry's cycle analysis here, you could have sidestepped the NASDAQ's big decline from late last summer through late October. You would have known about the big rally to come, okay? That's one that started late October and early November. Again, that's exactly what happened. Now, I don't know why this methodology works, but I can't deny that it works surprisingly often. It doesn't mean it's going to work every single time. Like I said, Bitcoin didn't work. Now, Larry's cycle forecast says the NASDAQ's likely to start rolling over starting around the middle of the month. Fortunately, this kind of analysis doesn't tell you much about the magnitude of a given move. I mean, otherwise, judging from this picture, you think we're in a hideous decline. But Larry's cycles tend to be pretty reliable when it comes to predicting the duration of these moves. Based on history, points that you should expect this weakness in the NASDAQ to last well into late May. So that would mean you don't buy the first dip, right? Don't buy the second dip. Now, look, of course, I hope he's wrong about the NASDAQ because many of you are in it. But this tech-heavy index has had a huge run, and it wouldn't shock me if it needs some sort of breather, right? It's got to consolidate the gains. So Larry warns you not to rush in to buy the first pullback. He's expecting a couple months of weakness, even as he still believes we're in a bull market, which I think is what matters to you. All right, now beyond the NASDAQ, let's take a look at Larry's cycle forecast for the broader base S&P 500. Now notice this picture looks a lot like the picture of the NASDAQ because there's a lot of overlap. Once again, the cycle forecast has been very good at predicting intermediate long, tops and bottoms. The S&P 500, you see that there and see that there. And right now the cycles are saying that the S&P is likely to peak this time around March 7. Well, just a second, that's Thursday. Remember, these dates aren't meant to be super precise. You can give or take a couple of days, meaning maybe S&P already started rolling over with today's heinous action. Just like the NASDAQ, Williams says you should expect multiple months of selling pressure. The cycle doesn't turn positive again until the end of May, so don't buy this dip and don't buy that dip. But maybe we need to look at a specific stock to really hammer this point home. And wouldn't you know it, Larry Sennett watches the show. What do you think? Yeah, it's Nvidia, right? Gives you a better sense of the market. Nothing. The stock held in today great. It's the newly crowned artificial intelligence kingpin. This has been one of the biggest winners in our history for the Charitable Trust, which is why I always tell you to just own Nvidia, don't try to trade it. However, I acknowledge that it is a volatile stock, and if you've got a huge gain, keep in mind that you're being undisciplined if you don't take something off the table. So I am not telling you that, look, you have to do nothing other than just own it. When you take a look at Larry's cycle forecast for Nvidia in red, just like with the NASDAQ and the S&P, history suggests that stocks should peak a week from now on the 12th, and that's right before the gigantic Jensen Huang State of the Union speech at the GTC 24 conference. And he doesn't see the cycle turning positive again until mid-May. I don't necessarily think Nvidia is due for a pullback that badly, but maybe like the NASDAQ. The stock has had a monster run, though, and we know that one can sell off hard when the market goes south. Now, this is important. I love Nvidia too much to back away from it. You need to understand that the stock sometimes gets hit with some nasty short-term turbulence, and if Larry's right, the turbulence is only a week away. We are maintaining our position for the Charitable Trust that, of course, I run as part of the CNBC Investing Club, but we're also advising club members who want to sidestep the decline. There's absolutely nothing wrong with ringing the register. Oh, God of battle, steal my Nvidia soldiers' hearts, please. But I get that if you want to try to sidestep this and believe in this work, you could get a chance to be able to buy it back cheaper. And I'm not going to disagree with that, okay? Here's the bottom line. The charts interpreted by Larry Williams suggest that the NASDAQ and the S&P 500 are both due for nasty sell-offs starting the next week or two, with the pain potentially lasting through the end of May. And since we're at the beginning of March, that's a long time. So brace yourselves for what could be a very difficult period. I am still believing in this market and in Nvidia, but that doesn't mean that it can never go down. Let's talk to Zachary in New York. Zachary.
Hey.
Hi, Zachary.
Hey, what's going on? This is Kenneth, man. How you doing?
I'm doing well. How are you? What's up?
Good, man. I was just wondering, my stock I have here is Oracle. Their earnings report's supposed to come out sometime next week. So I was wondering what's your views on that stock.
And what was the stock?
Oracle.
Oracle. Okay, the report next week. The last 2 quarters have been miserable. So I have to tell you, they're in the penalty box with me. Maybe this is the one that works out, but they have just disappointed. You only get twice with me because it's not a 3 strikes you're out game with me. It's a 2 strikes because I can't take the hit for my Charitable Trust. I have to put them in the penalty box. All right. The charts interpreted by Larry Williams suggest that the NASDAQ and the S&P 500 are both due for nasty sell-offs starting in the next week or two. So I say brace yourselves, and if you want to, do what we call schnitzel, take a little off the table. Be my guest. Because we've upped so much more money, including my exclusive with Inspire Brands. Okay, maybe that's a private company, you don't know them, but Dollars to Donuts, it's the owner of Dunkin', Baskin Robbins, and Jimmy John's. Let's find out about the pace of growth there. I'm going to talk with the CEO. And solar stocks can be a good addition to your portfolio, but you don't want to invest in every company under the sun. I'll explain you why. And, of course, all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.